Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Ian Grieves. Futures Radio Show is sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. If you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, and our Geo Futures. Today I spoke with Managing Director and Head of Product at ErisX, Ian Grieves. ErisX is the first to launch Ethereum futures and also Ethereum Bitcoin futures. So we kicked off today's show by discussing why they decided to do that and how things are going thus far with those products. Ian explains why ErisX has chosen to go with physical delivery for their crypto futures products. And we chatted about how much the crypto space has been growing, specifically in crypto futures. He explains to us what a bit license is and how regulation of trading on cryptocurrencies has been a positive in the growth of trading cryptos. Last but not least, we talked about Bitcoin halving and what that means for Bitcoin miners and traders. So without further ado, let me take you right to the interview with Ian.
I actually started back in the early 90s on the Life Exchange. I was lucky enough to land a job with SocGen or Societe Generale as an options market maker, kind of out of school, got that job, and spent a couple of years there kind of learning the ropes. I mean, it was definitely new, definitely exciting, and got a lot of support. And then kind of moved on from there. You know, a job of a market maker, especially on an exchange that like an open outcry market, there's a lot of opportunities to kind of move around. So, you know, in the early days, you always explore those opportunities, you know, whether it be for, you know, getting paid a little bit more or whether it be just something interesting and new. So, yeah, I moved through a couple of, you know, positions on the Life Exchange with different firms, ended up becoming a local or an independent trader, essentially, backed by a friend of mine. And, you know, took that as far as I could take it until the exchanges went electronic, right? It was a surprise to a lot of people on the Life Exchange, especially when Eurex went electronic almost overnight and took a lot of the volume in a number of contracts. Luckily, not the contract I was trading, which was FTSE Index, which is akin to kind of S&P Index options. So our product actually was the last to leave the floor. But, that changed the whole dynamic of trading, from standing in a pit, quoting out, option prices and things like that to going upstairs to evaluate, how do we trade as electronic markets, especially in the options world. So I actually helped start building technology. So I kind of moved away, from day-to-day trading into a much more technology-driven role where I was, helping software firms build algorithms, build trading systems, and helping them, understand what it means to be a trader, what traders look at, and then going out to the traders and talking to them about the software. So I really moved into a technology role, which was super interesting. I'd started kind of writing code a bit before, so I was interested in that. Not a developer, but still like to play around, and moved from there, as I said, to technology roles, and that actually brought me to Chicago to interact with, CBOE, CME, CBOT, those kind of exchanges, and talk to traders over there, and just grew, out of that. Really, still traded a little bit. Learn what it meant to trade the basis, which is a kind of commodity futures versus their underlying, and then as I said, the technology world kind of drove me through a few different iterations: algorithmic connectivity, high frequency infrastructure, that kind of thing, and then kind of got into crypto. Actually, talking to my brother who owns a bar in France, and he's like, "Hey, I'm going to start accepting Bitcoin as payment." I'm like, "What are you talking about?" So started exploring it, and really for me as a trader, I'm like, "Wow, this playground to trade, rather than thinking about what it meant as a money or a transfer of, funds and things like that. So, I took that to started writing some, basic Python algorithms, on some of these, newer markets. Didn't get burnt, luckily, but as I said, it was more of a playground than a, buy and hold strategy for me, unfortunately. But that, as I was doing that kind of as a side thing while I was working for, some other software firms, I ended up talking to the guys at Eris, and Eris being a interest rate swaps market at that time. And I knew those guys. I had some customers who were trading over there. And then, and when they started to talk about exploring crypto, I was super excited. So joined ErisX in April 2018 before we went live, and really helped build out the product side. We're a very product driven company, analytical and, product driven to what we launch, why we launch and things like that. But helping build an exchange and a clearinghouse has been super exciting to, to where we are now. So I think that's a good summary.
For me, I always really accepted the crypto as a trading product. When crypto really first started, I didn't really look at it too much as a currency. I looked at it and said, you know what? I think that technically this is probably a decent product to trade, because I don't know what else is it really going to go off of? I couldn't really look at fundamentals or anything like that. And I didn't start trading it right away. Bitcoin was out for several years before I began trading it. But
right.
A question I have for you is how old is Bitcoin now, right? I mean, Bitcoin is 12 years old.
2009, I guess.
So 12 years old.
11 and a half. Yeah.
Something I'm still not really sure of is it a currency? Is it a commodity? Is it a store of value? Is it all three? What is your take on that?
Yeah, so, it's a good question. I mean, let me answer from a regulatory standpoint, first of all. Obviously, we are a very regulated company, being regulated by the CFTC, the futures regulatory arm in the US, right, and offering futures on cryptocurrencies. So we view Bitcoin as they do as a commodity, right? That means it is regulated by the CFTC under a certain premise, and even fraud and manipulation of the spot market is under CFTC's jurisdiction. But they obviously are regulatory, the body of the futures, our futures market. So we definitely look as what products are we going to list, and how are we going to list them, what do they mean? We stick with the view of a commodity and things like that, rather than a security or any other type of asset class. So I mean, it depends on the different instruments, right? Bitcoin probably is more akin to a currency like commodity in the way it's used. It's transfer of money, maybe a store of value and things like that, versus an Ethereum or Ethereum like contracts, which are much more like utility kind of commodities, more akin to I don't know, corn, those things that, I mean, I guess you could say that with Bitcoin as well from a mining aspect, but Ethereum also has that component of its use case in the underpinning of smart contracts and things like that. So, in short, we really look at them as commodities, and that's how we go about deciding what to list and think, along our regulatory platform.
Well, you mentioned Ethereum. Let's just go there right now. You guys are the first to launch Ethereum futures. Why did you decide to do this, and how's it going so far?
Yeah, so let me start with the why, really. I mean, following on from your previous question, when we look to launch our spot market, we had a view that anything we want to launch as a spot contract, we'd love to be able to list as a future. So we launched spot back in April 2019, with the four instruments: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. And we know Bitcoin obviously had already been approved as a futures contract for CME and then ICE and CBOE in the time. So we really wanted to move forward and be able to start listing other contracts. So we've been working with the CFTC a long time with Ethereum. We commented on their public question earlier last year, and we've just driven that forward, really. So we wanted to launch it because we do believe in that value of a commodity to help price underlying instruments. And that's where, the Ethereum blockchain, with its, use of ether as the kind of gas, the fuel to drive, how you pay for the smart contracts, we definitely see that akin to like jet fuel or other things that people need to run their business. And so having an Ether-based future allows customers, miners, other people that you have a smart contract on an Ether blockchain. It allows them to have kind of price determinism of we know how much we're going to have to use or may have to use over a certain period. We may know how much we're going to mine over a certain period, and they want to have a little bit less risk against the price movement of that value of Ether and essentially, things like that. So we've been driving to push an Ether future so that people can really explore what it means to be able to hedge their exposure to underlying Ether, whether it is a fund who holds Ether, whether it is a miner, whether it is someone, as I said, who needs or their customers need, to use the gas on the Ether blockchain. So how's it been? It's a brand new contract. We're a very new market, so it's a growth period. Getting people onboarded to our platform it's not a slow process. I don't want it to be thought like that, but it's not just scan your ID on a website and off you go. You can do that with our onboarding for our spot market. And I don't want to play down the approach we take for AML KYC, which again we have to because of money licenses and things like that. But getting to be able to trade futures has a lot more regulatory oversight from the CFTC. So we have to follow certain practices and make sure we do things according to what our guidelines on our rule book is. And in doing that, there's a little bit more interaction. We're a very customer focused kind of driven company as well. Customers who may have a problem onboarding, we're very engaging. We reach out to them, but then anybody is allowed to become a direct member of our exchange and trade our futures contracts. So going back to the adoption, it's growth right now. It's getting people onboarding, getting people into the marketplace, letting them explore, understand the contract. So hopefully we'll start seeing some really good growth over the next weeks, months, and we can be the prominent exchange for listing physical delivered assets on cryptocurrencies and other things.
We'll get into the physical delivered aspect here in just a moment, but you said something that I found very interesting. You said for every product that you're introducing, whether if it's a spot product, you really want to have a futures market alongside that. And obviously, as a futures trader, it's great to hear the growth of futures in the crypto space. But how big of a role have futures really become in the crypto space?
Yeah, it's interesting. I think it's still a new, young market, right? So we're going to start seeing how the price of futures really either drives or helps people understand, where the price of the underlying could be in the future, right? So, these perpetual contracts, throw a whole different dynamic on the kind of style of future that the, traders have to interact with. Obviously, they're not regulated or really permitted in the US, but they definitely are a component to how people are looking at the price of the future, going forwards, and what that curve of future prices looks like. So, the underlying prices, in traditional capital markets or commodity-like markets, corn, oil, those kind of things that obviously have a massive spot market, but also a huge futures market. And you find that, farmers who want to hedge their, crop growth and, pricing they're going to get from that, obviously are looking to the futures market to not just hedge their position, but really, determine, what is the right value for the futures contract and what is the right value that spot's going to be in the future. As you get bad weather, for commodity markets, or expectations of growth, the futures price is what drives the underlying, and you see that quite well, even with things like the S&P, which obviously is pretty much a 24/5 market. It may be driving the underlying market from a hedge perspective, and then changing how people need to reprice their ETFs or even the individual components of the S&P. So we definitely see the futures market eventually being the kind of driving price discovery mechanism for commodities like crypto.
Hey everybody, a quick pause here to talk about FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index futures contract, symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. All right, let's talk about the physically delivered side of things. Pretty much on a day-to-day basis right now, all I see is how much CME's product continues to grow on the Bitcoin side of things.
Yeah.
That's not a physically delivered product, but you guys have chosen to go with a physically delivered Bitcoin and now Ethereum product. Why that route?
Yeah, it's an interesting question, right? Should a futures product be financially delivered or settled versus physical? And we definitely think there's room for both. There's people who are going to want to, take a position in the crypto market that really don't care about the physical commodity and just want to be involved in the price action and will tend towards CMEs like product, with financial settlement or others. Our view is that these products are new, and so they do have some underlying use case, whether people use it or not. And so we view that these commodity markets are better as a physically delivered commodity because people do want to own the underlying, at the end of the day. And we had a lot of customer conversations and interaction, with participants, as I described, like mining firms, people who actually do touch the underlying commodity, where, if you're going to trade that on CME, a hedge, which you can do, right? You then got to raise US dollars as capital to put up as margin to be able to go and sell the future, So whether that's in your workflow to be able to have those US dollars, or borrow those US dollars to go and hedge your position is an interesting thing that people have to, grapple with. Whereas with ours, you can actually use your underlying commodity as your, margin, or your collateral to, actually hedge your position in the underlying market. So what does that mean, right? That means, you put up your commodity as your collateral to be able to go and sell futures. That means the capital you're maybe mining, the collateral you're mining and actually growing can then actually be put to use to, give yourself some price, determination in the future of where you're going to actually be able to sell the new crypto that you mine. So, taking that through the life cycle of a futures trade, it means that at the end of the day, maybe you don't want to end up with the commodity, or maybe you do, and you can take either side of the futures position so that when you get to expiry of the futures contract, you can either make delivery because you've already, got those assets, or you can take delivery so you can actually get into the underlying spot market. So that works for, commodity markets, as I kind of described, whether it's US treasuries, whether it's, commodities like, grains and fuels or things like that. So we definitely think that there's a huge need for physical delivered crypto, futures.
Walk us through how it actually gets delivered.
Yeah, a great question. So we remove the complexity of that, right? Being an exchange where price discovery happens, so the trading, a central limit order book with a, first in, first out kind of matching algorithm, all that trading interaction, and let's just stick with the futures mechanism rather than spot, that creates positions for customers, right? Going long, going short, building up positions across, maybe a number of expiries if that's what you need to do. What happens there is those positions are held in our clearinghouse and evaluated for risk and things like that. And so the job of the clearinghouse is to kind of sit in between the buyer and seller as a to remove any counterparty risk. That's our job as a clearinghouse. And so what it means when we finally get to expiry of that contract, and our contracts right now all expire at 10 a.m. on the last Friday of the month. Okay, it means that at that time, people who are long, people who are short, those positions in the clearinghouse essentially get resolved, you could describe it as, so that the buyer who's put up, dollars to eventually get coin is now going to receive that coin from the seller, and vice versa. The seller has already put coin into our clearinghouse. So when we come to that expiry, the seller moves essentially from being reserved from those clients' accounts to move to the actual account of the counterparty, and it moves through the clearinghouse to remove that counterparty risk. So I don't know if that was clearly described, but really if you can picture the fact that as you've put these positions on, the collateral has been withheld, the margin has been paid, and then at expiry, those assets, the underlying assets that are in people's accounts and have been reserved, typically move through the clearinghouse into the other account. So the buyer receives the coin, the seller gives up the coin and receives the dollars, and that all happens in the clearinghouse.
Gotcha. So let's use the Ethereum futures as an example. Right now, I'm looking at it on my chart. It's trading roughly 201.
Okay.
In order for me to buy the future, how much money do I need to have up in my account to take delivery?
Yeah, good question. Yeah, that's a good question, right? So our order under the CFTC right now is a fully funded market. So that means for the one future that you put up, which our products are one future equals one ether, you got to put up the $200 thereabouts, $201. So, and as we come down, as you talk about it, hopefully not putting the market off. But yeah. But yeah, you got to put up the $200 essentially to get into the futures market. So what does that mean? Is it correlated with the underlying? As a fully funded market, it is quite closely correlated with the underlying. There is some price, whether you call it arbitrage or basis, consideration. So maybe you can buy the futures for a little cheaper. Maybe you can buy the futures and, sell the underlying spot a little richer, so you can kind of trade that arbitrage or that basis as a description from typical capital markets. But yeah, you got to put up the US dollars. On the other side, you got to put up the coin. So going back to that reference of, people who have the coin who would then need to raise US dollars, and of course now talking Bitcoin, to sell or hedge their futures, hedge a position in futures. On our market, you can actually use the underlying. So the seller of ether futures, uses their ether collateral sitting in the clearinghouse to sell the futures.
What's interesting is it's not leveraged like we're used to with other futures markets.
Yeah, agreed. There's a lot to say about leverage. Obviously, CME's contract and ICE's contract with about 40% leverage, is like 2.5, kind of times leverage. Obviously, you've got these markets offshore, which unregulated, so to speak. I don't want to bash them. Obviously, it's done an amazing job in offering markets to, retail professional traders. Their base of leverage is obviously astronomical, and obviously we've seen some of the effects of that when people get auto deleveraged, the movements some of their markets take. But these right now are unleveraged contracts. That's right. So when we went to get our clearinghouse license, which is an extremely difficult thing to get, right? There's very few U.S. markets that have a CFTC regulated clearinghouse. We put in our application as a fully funded market to get to stage one. So stage two of that, which we will drive forwards, will be a margin based exchange. But that's for the future. That's not right now. However, we do have a spot market, right? So how that differs to obviously the CM and ICE is, you can use US dollars and have margin contracts over there, but we actually have the spot market as well as the futures market, allowing people to, trade the two together and really kind of acting as a basis like trade with a little bit more capital efficiency. As I said, if a member comes into our market, buys the underlying spot contract, i.e. the ether for X price, and then they could go into the futures market either immediately or later and sell that future, they've essentially got a 100% hedged position where they've locked in, hopefully some profit potential basically as they go towards expiry. Those two things converge and they realize the profit at expiry. But it is, as you mentioned, right now unleveraged.
You guys also launched a product, Ethereum Bitcoin futures.
Yeah. There was obviously news around our ether contract coming out a couple of weeks ago. But at the same time, when we got approval for that contract, we actually got approval for an Ether Bitcoin future as well. Novel, pretty much. But when we look at these markets and, these underlying assets trading against US dollars or euros or, other kind of traditional fiat-like currencies, you see a lot of volume still in the other pairs, especially Ether, Bitcoin, or things like that, where these currencies, as I've just described them, really have a lot of correlation and interplay. And people, maybe people are, wanting to move between, or people are definitely wanting to move between, different commodities for different reasons. And so what we wanted to do is make sure that we could allow customers to price that curve, that interplay between Ether and Bitcoin, while it is relatively correlated, but giving them a price discovery in that mechanism. Why do you have to have Ether only priced in US dollars? Let's price it in Bitcoin. So now we've got the kind of triangulation of Ether, Bitcoin, and Ether Bitcoin futures, allowing people to have more products to trade and more price discovery to use.
I want to move on and talk about a big topic of conversation lately in the crypto world, and that's Bitcoin halving. Got a lot of text messages from my friends about this, and I honestly had to Google it myself to even know what it was. Explain to everybody what Bitcoin halving is, and actually how that even comes about. Like, who makes that decision that's going to happen?
Yeah, well, with Bitcoin, it's all part of the blockchain code underpinning, right? So, the every 4-year halving of Bitcoin is all to do with the money supply of, how the amount of circulation of Bitcoin kind of grows, right? Yeah, so there's the mining reward, right? And that mining reward obviously dropped during the halving, i.e. halved. And it has happened, previous, 4 years beforehand and 4 years before that. But that mechanism is all about, how is the money supply of Bitcoin, being produced. We have this regular, 10-minute block or thereabouts cycle of, creating new coins based on the mining rewards. And, I guess Satoshi's original premise of how the money supply for Bitcoin should work is that, that happens, every 10 minutes as the blockchain, and that 10-minute period is controlled, through the difficulty. But then every 4 years, we need to reduce that. So it's not an endless supply of Bitcoin. It's not just, keep printing Bitcoin, like a government may do, because they get to choose, but more underpinning of the blockchain itself, and how the scarcity thereabouts of new Bitcoin comes around from every 4 years, reducing that, that payout of the reward every 10 minutes.
While I was going through my search of what Bitcoin halving was, of course, I saw a bunch of other things on Google, and one of the things was a bit license. And so I went and read a little bit about that as well. And what I find so really amazing about how far we've come in Bitcoin, from the point of where really, when I first started hearing about Bitcoin, it was all about, we're staying away from the regulators, we're staying away from the banks. This is a great thing for the crypto space. Come join this revolution, to now where I see more and more regulation on the crypto space, and it's actually helping growing cryptos. So talk to us about a bit license, and just overall how regulation has now become really a part of crypto and actually helped the growth of it.
Yeah, look, people shouldn't think regulation, oh, damn the man, why are they getting involved? It's not about that, right? It's about actually protecting the individuals, the people who want to make investments. I mean, so regulation is about, fraud, manipulation, bad practices, and things like that, which, if you don't control that, then any commodity, asset, currency is going to be used for the wrong purposes, or people are going to get burnt through, scams and things. So, people shouldn't see regulation as a bad thing, So, our futures market, very regulated. You made a comment about CME's, growth of their 100% regulated futures contract, and it is good for the marketplace, because it means that, you remove as much as possible any bad actors from either manipulation or causing harm to, to a product, a commodity that wants to grow. And so, in doing that, us as a regulated futures exchange and clearinghouse, we're regulated by the CFTC. The spot markets, as I kind of mentioned earlier, they're not really regulated by the CFTC, except they do have oversight for fraud and manipulation. But to be able to operate a spot market, i.e. the transfer of, currencies between, individuals, You need to work with each of the states, pretty much all of them. Some of them don't require licenses, but most of the states and areas of the US where you need to get money transmitter or money service business licenses, okay, which we have about 48 of now, and that allows you to conduct money transmission, money transfer in those states with with the people who live in those states. So as I said, we've done that with most of the states. And one of the states that's interesting is New York. New York have a money transmitter license, as they've had for many years, based on people who want to run currency-like businesses, i.e., come and change your money for another currency, or payday loan kind of businesses that need similar licensing. However, New York took it a step further, and they created this BIT license, which we've had for a number of years now as well. And this BIT license that people obtain is required for you to conduct money transmission of cryptocurrencies and crypto trading. Essentially, any interaction of crypto between parties in New York State needs to be conducted by someone who has a BIT license. Okay, so there's not that many of them. I'm not sure exactly which number we are. I should have checked on that before I came on the show, but we spent over a year trying to get this license. We actually, I've got to say, we expected it to be quicker, because these kind of hoops that you have to jump through to become a BIT license holder are very similar to our federally regulated business. But New York are very, very due diligent on who is conducting business in cryptocurrency. So yeah, we had to go out and get this license. Now we have it, which is great. We can, we've started onboarding a lot more customers in the New York State, and that means just great growth for our business, and for the people who want to be able to trade, in our spot markets.
Hey everybody, I want to take a quick pause and talk about RJO Futures. They are a long-standing brokerage firm with personal broker relationships to learn, discuss, and trade the futures markets. To learn more about RJO Futures, please visit rjofutures.com. I'm someone who definitely felt that when cryptos really first started becoming popular amongst the traders, that regulation was only going to help it, because there were so many friends that I had, whether they are in props or whatever, worked for companies, and they're saying, you know what, I can't trade cryptos, right? And I was thinking, I'm like, you're missing a huge amount of traders that really can't even trade these products. So when I started having those conversations with people, I'm going, you know what, at some point they're going to need to figure out a way to be able to get these people involved. Otherwise the growth is going to be minimal, because I just don't think you can count on only the retail side of things. Or
no, you can't. No, not at all. Yeah, and actually we could even, and sorry to jump in, I just suddenly thought of another thing, right? And that is, customers' assets and how they're protected, right? So, in this spot world, in these exchanges throughout the world, obviously have their local, regional like regulations potentially, and but very few of them actually have obligations to separate their assets from their underlying kind of day-to-day operating money, okay? Whereas the futures market for many years has had something called seg funds, okay? What that means is someone who is operating or has customers who trade futures, and that could be an FCM or even a clearinghouse like we are, has to, by law, keep those funds completely separate from the funds they use to operate their business. It's called seg funds. And because we are a clearinghouse under that CFTC regulation, we have to keep the funds that are used for our futures trading completely separate. You don't get that in other spot markets. Now, we operate that way for our spot market, but what I'm getting up there is really customer asset protection. Yeah, you get it from banks with like FDIC insurance and things like that. You get it from, your FCM if you have a futures account at, TD Ameritrade or one of these others. But we as a clearinghouse have to also keep those funds separate and segregated from our underlying operating money. That's not a requirement, as far as I know, for the spot markets of these other exchanges. So not just bringing in customers from other jurisdictions, not just bringing in professional traders, but having that, that comfort that your money is by law separated hopefully brings people to think, regulation is a good thing.
Oh, agreed. And I'm the perfect example of that. Is I went from trading the spot to, once futures were introduced, I started trading the future side of things. Just my comfort zone, and really exactly the way you explained it with the seg funds and the futures accounts. It's what I've done my whole life. I just felt better about executing in that space versus the spot space. Now, obviously, we've come a long way in spot, and I feel a little bit different about it now than I did so many years ago. But no doubt, I think regulation has been an overall positive for crypto. A couple things before we get into rapid fire. You made some strategic partnerships with Fidelity and TradeStation. Talk to us about those.
Yeah. When we started building this marketplace and looking at the types of investment that we would take to grow the business, we wanted to make sure we had not just investors from different areas of capital markets, outside capital markets, and crypto, but also people who bring value to the marketplace and the industry in general. And our belief of intermediated business is not because we think everybody should take a piece in between. It's really not about that. And even in traditional capital markets, equities, futures, etc., the role of an intermediary is to look after the customer more than the attribute of matching business together, right? So our business as an exchange and clearinghouse is really about security of funds, as we just talked about, as well as the matching process of central limit order books, and really sticking to what we can build and what we know best. We are actually a little different in that we can take direct individuals, both for our spot and futures markets, but we still believe in this intermediated business. TD Ameritrade, as well as an investor, have a huge amount of educational programs and helping traders in the way that they access products, how they think about products, and that education is extremely important. And having networks of, these investors, like you mentioned, TradeStation, Fidelity, TD Ameritrade, and having that network and help and working with them is what we see as, again, how a marketplace grows. So it's amazing now that, Fidelity and TradeStation are interacting with our market, providing their customers new sources of liquidity, on regulated platforms and things like that. So super exciting. Definitely how we see our intermediary vision, moving forwards.
It shows you that crypto is not a fad. It's here to stay. Not that I really ever questioned that it was going to stay. I mean, I always had my questions about it, initially, but when I started going to more in-person events and talking with everybody in our futures industry, I realized that everybody was talking about crypto. And I said, you know what? You don't see all these big players getting involved with this if it's not going to be growing. And it really was everybody. It was very few people that weren't. And now crypto has just become a part of the trading industry.
Yeah, definitely. I mean, I think every day, people are reaching out to us and, tell us more, where should we go? What information should we look at? People who have been in traditional assets for many years, it's still maybe, a long way off from maybe some of the big mutual like funds from, taking positions, but the more these products are regulated and the more they're kind of, capital invested in grows, the more even those types of people will start, entering into this market. And obviously, people like Fidelity who service, huge names in kind of asset management and things like that. I don't have any insight to what their customers are doing or how they're, talking to their customers about it. But maybe this is a great path forwards for them to be able to work with, a huge name and enter the space. And then even, like you said, TradeStation, professional traders who want to access multiple markets. We're just one market, and it's great to have customers who come directly to us and use our tools to trade or build their own tools on top of our APIs. But, if you're going to go out and, if you already have an account and you already use certain tools, having those tools then connect to more regulated markets just broadens the space that those traders can trade in, like yourself. So, I mean, it's great that we're, it's just making it more available.
Bottom line is traders just want to make money. We want to trade products that resonate with us, and crypto resonates with a lot of people. No question, it's here to stay. All right, rapid fire questions next if you're ready for those.
Sure.
All right, everybody, our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can try it now for free at tryttnow.com. Ian, first question for you. What trader has influenced your career the most and why?
Yeah, I can't really name any specific traders that I would say people would know their names of. My early bosses, were definitely proponents of, helping me grow through, what I should look at and how to trade. I would say when I get asked this question, my grandmother was actually the person who got me into trading, not because she was a trader, but every time I, talked to her as a kid, we ended up talking about, where are the price of stocks and shares and things like that, so it fueled my interest. So I can't say any other specific trader, off the top of my head that, I would say influenced my my trading.
What was one of the hardest things for you to overcome in trading?
Well, I would think in the beginning, the learning curve, but then kind of the emotion of losses and, wanting to prove that I could do the job to my, to my peers and to my colleagues. It was really, taking a losing trade was difficult because initially you feel like a failure, like why am I losing money, or losing money on this specific trade, and you got to kind of try and remove that emotion that, you can't win on every trade, making the percentage of winners greater and the capital you make from those winners greater than the losses is obviously key to kind of like a risk management strategy. But in the early days, it was really, it was kind of gut wrenching to think, damn, I've got to take a loss on this trade. How do people view that? So that was probably the most difficult thing initially.
How has your trading process evolved over the years?
Well, I would say my early trading career from, trading in the pits, open outcry options, moving into a technology-driven world was interesting because kind of as I moved out of trading into technology and still kind of trading, on the side, it definitely drove me from a, what are the markets doing now to much more like a, I don't want to say statistical, but much more controlled around what are my rules of trading, why am I doing this trade? Then where am I going to get out before I even do the trade? Much more systematic in my approach rather than, oh, what's this product? What's this product? Why am I, should I be long? Should I be short? And moving into a much more systematical kind of trading methodology, and then being able to write, kind of logical code around, kind of not just back testing, of should I have done this in the past, but more, okay, what is my rule set for trading? So that's really how I take that approach now, even though I'm not trading, especially on a day-to-day basis, but much more even, long-term for my own, growth of, personal finances. I take that same approach. It's just over a longer time frame.
What is one attribute you believe every trader should have?
Being comfortable with risk is probably, and I'm not saying just, risk it all, it's more about being comfortable that you're going to have to risk something, and being able to, going back to that, being able to take losses, you got to be comfortable with the risk you are taking so that as you take losses, why you've had those losses, those losses are not just going to compound because you've got a strategy for, de-risking and risk management, but, having some element of risk so that you can then explore new markets, growing your trading to take more risk so you can grow your P&L. If you're always a one-lot trader, then you're always going to make one-lot type profits. You could run them longer and grow, through your time horizon potentially, but, you got to grow your, the amount that you do risk. Maybe the percentage stays the same, but the amount of underlying notional that you're risking just to grow your trading.
Favorite book about trading?
Difficult. I've read. I've always tended to read the more technical books so I could kind of learn more about trading. So the Market Wizards books, technical in a sense, but more stories of traders. Was extremely interesting to me as I was kind of growing in the early years. It's like, what are different people doing? Why are they doing it? Why is, one person, killing it in bonds, whereas one person's killing it in, another asset class, So, yeah, I would say the more technical books, option pricing and volatility had to be a go-to in the early days when I was learning how to options trade. Treasury bond basis was an extremely interesting book. But then, even sadly enough, I still go back to like Jesse Livermore's, biographies and things like that. I just think it's so exciting that, people many years ago, no real technology were, just, building how trading happened. And it's, even those stories kind of, they give me that kind of buzz that, my hair goes on end talking about it, kind of like excitement.
What's the best piece of advice you received about trading?
Best piece of advice I received about trading. I would say it's probably things like risk management. I can't narrow it down to someone using one saying. It depends on how you look at this, right? I was a trader who, traded for banks and then my own, or other people's money and then my own money. So I had to take risks to try and grow that P&L. I had a friend, not necessarily a quote that I should use very often, but he said to me, I said to him as we were learning, I'm like, do you get all this option stuff? And he goes, no, not really. I'm like, I think I'm getting it. I understand it. And he said, Ian, I don't know a lot about options, but I know a lot about people. And then he went on to be a successful broker, so he moved away from trading. So, I think everybody has, different avenues to explore in trading. So, one piece of advice I don't think necessarily covers everybody's, how they're going to be growing up in trading.
If you could go back in time and give the younger you a piece of advice about trading, what would it be?
Believe in yourself, maybe. In the early days, it's like I said, taking those losses. It's like, is this ever going to work? Sometimes you had that feeling on those days where it just, nothing you did really seemed to go right. It was, believe in yourself, and then when you've got that belief, try and find the path that's right for you. Maybe that's going back to, the advice, I was given. It's find what works for you. Don't try things that you're not comfortable with, but then when you get that comfort of doing something, kind of grow that. So obviously anybody who knows what they do 20 years later would love to be able to tell that to their 20-year younger self. But, there's a lot of things I wish I'd maybe tried, markets that I maybe should have traded and I didn't, but, it's a tough question. Everybody would love to have that hindsight.
If you had an elevator pitch me your edge in trading, what would you say?
Yeah, well, not necessarily having a specific trading system right now because I'm not really trading every day. I think that pitch would have definitely changed over the years as I learned new things and learned new products. I guess I could ask you, where are you trading physically delivered ETH? And if you're not, why aren't you? Less of a pitch about a trading strategy and saying, why aren't you trading, our markets or specifically, and I don't know if you are, I don't have that insight into who's trading necessarily on our market, but I'm just saying, my pitch would have to be these days either around a technology solution or a product that maybe a trader should be getting involved in.
If you had to pick a profession other than working in financial markets, what would it be?
Well, nothing to do with the times we're living in, but for the last few years, I've kind of really enjoyed baking bread. Strange. Would I ever become a baker? Actually, I've always been an early riser. Would I get up at 3 a.m.? Probably, but, no, I love baking bread. The mechanics of it really, rather than just eat, well, I love eating it, but, the mechanics of, the time, the temperature, the ingredients and how things come together. I found it very therapeutic over the last few years to kind of, not necessarily experiment, but to understand what it does, what it is that's actually making the bread rather than just throwing the ingredients together, using your hands and then, oh, that didn't work, just understanding. So yeah, it'd be kind of cool to become a baker. I wouldn't say I'd be challenging anyone in that profession right now though.
Last question for today, Ian. What's your favorite thing to do when you're not working?
Spending time with my family. this strange time of coronavirus has obviously led us all to be probably at home more. I definitely cherish the time with my family, my kids, my wife. I mean, it's almost a pleasure not having to travel to the office. It does make you work a little harder because you can't necessarily split the time between a desk and being at home. But then outside of that, which probably maybe a cliche, is then traveling, seeing my broader family abroad, and going to the mountains, going to the beach. I love being outdoors, biking, any kind of activity like that. So I wish I had more time for some of those things. But when you're trying to build a business, then your commitment is to the future rather than you got to cherish the now. But that's where my family comes in, and hopefully building a business can allow me to cherish things in the future that I can get to.
Where can people find you and ErisX on Twitter?
ErisX.com, would be a good place to start to find, our business, I guess. Our Twitter handle, Eris_digital, is the great place to find ErisX, _digital, is the best place to find us on Twitter. Me, I don't tweet that much. I haven't really had time. I leave that up to our, marketing professionals. But we are putting out a lot of good content. So erisx.com, and then going to the news section and looking at our blog posts is really good to understand our take on the market, our take on products, and understand what we're trying to do and where we're going.
Thank you so much for sharing everything about what's going on with you guys, with Ethereum futures, and just the crypto space in general. I learned a ton from you today. Thank you so much for joining me on Futures Radio Show.
Hey, not a problem. Great to chat to you, Anthony.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.